Hello guys and girls and welcome back. It's your boy Big John and I'm here today to get you clued up on market structure. Yes, that's right. I know you're going to love this one. I'm going to be breaking down what's happening with gold and how to identify breaks of structure and change of characters in the market. Now, don't forget to hit that like button, subscribe, and hit those bell notifications. Let's get straight into it. Okay, first and foremost, as always, I'm going to be telling you, join the free Telegram. In this group, I'm pretty much here every single day telling you what could possibly be happening with gold, and I'm giving you full market analysis on what we could be looking for in terms of buys or sells and even other trading instruments. If you're not too familiar with how to use Telegram, then you can also join my free Discord. Both of those links are in the description below. In here, you can also ask me questions in a day about anything trading related. Okay, and here is Neo, the indicator expert advisor, and everything I'm going to go over today in terms of market structure with break of structures and change of characters. You can easily get yourself on the pre-order list for Neo. It is 100 GBP, and what this actually does is it marks out all of the break of structures in the market for you and the change of characters with alerts that can come to your phone or will appear on the MetaTrader 4 app. And with the EA update, you're going to be able to use the auto trading button over here to take any of these entries with an EA, which is an expert advisor, automatically. Something very similar to like this sell setup that you might see over here, which price action went all the way down here. Or even if you missed that one, there was another one right over here to be able to take a trade setup like this. Neo is also going to mark out all of the liquidity highs and lows for you, as you can see with these lines above here and below here. So you will be able to know when price actions grab liquidity and could possibly give you a trade setup afterwards. Okay, so now we are on TradingView, and I do know a lot of people do struggle with when break of structures appear or change of characters do appear in the market, but I'm going to give you a quick understanding of this using the 15-minute time frame and gold. This does work on any trading instrument, and I do want to put a disclaimer out there. Even though you can use this to increase your win rate, you will still have some losses with trades because of course the market will do what it wants sometimes, but this will definitely help you become a profitable trader as you start to see this pattern forming more and more. So when it comes over to bearish break of structures in the market, we need to pay attention to what the market was doing previously. We can see over here there was a higher high, then there was a higher low, and then there was a lower high, and we had a break of this higher low over here. And whatever time frame you're looking at, you want to make sure a full body candle breaks through this level, and then that would be considered a bearish break of structure. When it comes over to a bullish break of structure, you can see the market formed a lower low, and then we had a higher low, and we had a lower high, and then eventually the market broke out through this area with a full body candle, and then you would have a bullish break of structure. When it comes over to a bullish change of character, which is also known as a chock, we are expecting a full body closure of a candle to break through a higher high. When we're looking at a chock, which is a change of character and it's a bearish setup, we are looking for price action to break a lower low with a full body candle just like this. Very simple, guys and girls. Now, people might also ask me, how do you understand where to put your higher lows and your lower highs? And this is very important, and I believe this method is actually going to be easier for you to understand this. So what we're actually looking for is the market to create lows or highs, and then we do want it to break through that level on whatever time frame you are looking at. Once it has officially broken through that level with a full body closure of a candle, this is when you can print your higher lows and your lower highs. If you're thinking that's confusing, don't worry, I'm going to go over this in a minute. Okay, so right over here you can see I have the recent movement of what gold's been doing on the chart, and literally as price action's been moving like this in the free Telegram group, like I've said before, I've been breaking down all of this information in that free Telegram group for people to be able to see what gold could possibly be doing next. Currently we are looking for a longer term sell on gold because of other things from the higher time frame, but if you were scalping, this is what's been happening lately. Okay, so let's start off with this. We can see that the market had been coming down and then eventually reversed. Once the market actually reversed off this area, we see the market did actually break out from this level, which was this high here. So this is officially our lower high and our first breakout. We're going to mark this one out as a lower low because it's our first breakout and it's the lowest point we can see from when the market had pushed all the way down here. Now we've seen the market pull back and then break structure again here on the 15-minute time frame. This is now officially again our lower high, and now what we have here, which is important, is a higher low. This is starting to show us that there is a possible uptrend forming in the market. Now we've seen another break of structure over here. We can officially put our lower high above this last high that was over here, and then our higher low at the last low, which was here. This is when I started to tell traders to start to look for a trade setup, because Neo, the indicator, was actually automatically printing all of this structure for me to tell me that the market could possibly be going up. And how you would have easily have taken this trade setup is by entering here on the break of that candle, and your stop loss would be just below this low, and you would be targeting the New York session high over here, because this is where liquidity has been left in the market. I will make a video on liquidity. If this video gets 100 likes, no problem at all. This was our first official trade setup, and this was because we saw the market creating higher lows, and we looked for our second higher low to be formed to give us an understanding that there's a stronger confluence on the 15-minute time frame for a possible continuation of a buy trade. Now the market has bought all the way up to this level here, and then we saw a rejection. Remember, our last structural level is down here for the higher low, so unless price action breaks this level, we haven't seen a bearish break of structure yet. As soon as the market turned around and started to buy up and broke through this level here, we can officially call this our higher high up here, and then we had a new higher low down here. This is something similar to what happened over here. We had the big sell going down, and then eventually we got a break of structure here. This is why this one was the lower low, especially the fact that we had a higher low form after, where the market structure started to push up. Now that we actually have our first higher high printed, we have to start being a bit more careful with what the market can do, because of course the market could be going back down or it could be going up. We are only going to be looking for continuations of buy trades once the market breaks this higher high, similar to how we was looking at when the market broke this lower high here. So because we haven't seen a breakout over here, we're not looking for no buy trades just yet. We're waiting to see what the market does in order for us to take a trade setup. So as we saw that there was a break of structure over here in the market, we actually had a lower high that was formed here, and we had a higher low that was here. Now we've seen the market come back up here and pull all the way back down, and then we've seen a break of structure at this level over here. This again gave us another lower high formed and a higher low here. Remember, we're not going to be entering any buy trade setups again, because the market has not broke this level here for a continuation. When the market came up to this level over here, then it pulled back, then it came back up here again, and then eventually it broke this structural level. This officially let us put our higher low here, our break of structure, and our lower high up here. So we still have a higher low down here, and this is where another bearish break of structure would be, but we have now had our first official break of structure towards a bearish momentum on the 15-minute chart. So this has given us an indication that in the future we may start to see a sell happening on gold. But just like what happened over here, we're not entering on our first break of structure because we don't know if they want to continue to go up for buys or if they want to go down for sells. We've seen the market pull down to this level over here, and then we've seen a push back up on price. We've seen it come down again, all the way down to this level here. Now we've seen our first break of structure on the 15-minute time frame from this high that was just situated over here. So what do? We have a lower high we can officially put here. We have a higher low we can put here, and also we can put a higher low here because we've had a tap to this level before and it has not broken it. When the market also broke through this level up here with this candle, which was over here, again we do the same thing. We can officially now put our lower high here, and this confirms that this is also definitely a higher low. So we still haven't seen a break of structure bullish up towards this side, so we're not looking for any buy trade setups, and we have not seen a bearish break of structure just yet. So right now we have seen a pullback in the market here, and then eventually we did see the market buy back up, and we saw a sell trade going back down here. Now this is actually where we can put a higher low now, and we actually have another break of structure over here in the market. So even I didn't have this marked up straight away, but that was okay because I could have even missed this setup and never caught this sell trade, or I still could have, as we can see something happen later on. Now when the market did break this level, this is our second official sell entry for a possible continuation on gold for a setup. Now what we would be looking for is to enter a trade position from here. What we would do here is put our stop loss just above the highs here, and then we would be looking to take a sell trade setup all the way back down to one of these session lows, which would be something like this New York session low over here, or possibly this Asian session low here. Now going forward, we can actually see the market did stop us out here, and that's absolutely fine. You're not going to win every single trade setup because this can happen. So let's just delete this one and move forward. Now when the market actually started to pull back towards this level, we never saw a break of structure above here. Then we did see a break of structure just below this level here, making this a higher low and this a lower high here. Now we're going to do the same exact thing over here. So we saw our break of structure here, and of course this has given us a second possible entry for gold. So we would have our stop loss just above this high, and we would be looking for a sell trade setup. Again, I'm showing you the reality here. You would have lost this trade setup because your stop loss would have been just above here, or even if it was above the other high, again, price action would have taken you out later on over here. So you either would have entered once and got taken out of this trade once, or you would have added an additional position here and then you would have got taken out of both of your trades. Again, this is absolutely fine. This happens in trading, and not trying to cherry pick entries on trade setups. Now we've seen the market push down a bit more. It did pull back up, stopping us out from a possible trade entry. That's absolutely fine. We had one winner and two losers. And now what did we see here? We saw the market pull back down one more time, and then we saw our third bearish break of structure that happened here in the market. So when we saw this third break of structure that actually happened here in the market, again, we're doing the same thing. We would have entered on the closure of this candle. Our stop loss would have been above this area here, and then we would have been taking our trade down to this level here, or down here, which is the previous levels of market structure. And we was able to actually catch a win in this trade this time. Okay, so just to show you a review of what actually happened with price action here, we had 95 pips here for a buy trade setup, which actually went all the way up to here. So this was a 150 pip trade, but we had 95 pips to TP. We're going to count our full trade here. So this was 158 pips here. Then we had a 35 pip stop loss hit. So let's just say that was 35 pips there. So we're still in profit currently. Then we had a 55 pip stop loss here. Again, we're still currently in profit over here from this trade here. And then we had a winning trade that went for another 150 pips. So currently with the maths, and I'm sure you can work them out even yourself, we're still in profit scalping using this strategy. So the whole point of this is to understand market structure and how it's moving. The reason why I tell you to pay attention to the secondary entry on the 15-minute time frame is because it gives you a stronger confluence that the market could be continuing to go bullish or bearish in that 15-minute trend. When you're on a higher time frame, you might have to vary between checking the secondary entry and the first entry, but I hope this all does make sense for you guys and girls. Now, if you're struggling to learn any of this type of stuff and it is still a bit difficult for you, I definitely suggest you get into my lifetime access VIP group, where on Sundays I go through market analysis every single time, and I'm going through pretty much all pairs, showing you what could possibly happen in the market. Remember, I'm not telling you you're going to win every trade. Trust me, I don't win every single one of my trades, but what I can do is give you a better understanding of what we actually see in front of us. I hope this does really help you guys and girls, and don't forget to hit that like button, subscribe, and hit those bell notifications. Right now, it is your boy Big John, and I'm out. Peace.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.